Hey everyone, good to see you back. I actually had a request for a video, so I just wanted to, throw a video out there after the program. And this is just kind of the feedback that, it would be cool to get if there's something you want to see, kind of like I said before. Just reach out to me, let me know, hey, can you talk a little bit about this? And I'll be like, yeah, of course, let me do what I can. So let's dive into this. So one of the question that I had that someone was kind of looking for more information about was more of the day trading type of stuff. And I realized, after they said that, I probably should have talked a little bit more about that during the course. I think I was kind of focusing more on that, that macro, big scale, kind of what I do. And I don't really, not as much of the day trading type of things just because I work, during the day and stuff like that. But if I have a day off, yeah, of course, I'll take advantage of it. But so to dive into a little bit of this, I'm just gonna show you a couple charts. We're just gonna go through the basic ones that I've been telling everyone to trade: SOXL, TQQQ, UPRO, TECL, SPY, and QQQ. So first of all, like when I do day trading, I always have CNBC on. That's for one. I want to know what's going on with the market the exact time that I'm trading, just in case if there's any big news coming out, I can sell as long as I'm, at a profit, of course. And, if obviously good news comes out, kind of want to buy in as soon as quick as possible, before it gets too high. Now, the other thing I wanted to talk about was taking advantage of stop loss orders, which is what I use. So when I go to buy stuff, I typically do market orders. It's rare that I'll do anything else. I'm just kind of like, I'll just buy it at the market price, give or take a couple pennies, whatever. Now, stop loss comes with selling. So how that works is just say if, say the stock, we'll just say like something like this is at $149. I would put a stop loss as long as I'm positive at 100 and $48, like $1 less or $2 less or whatever it is. So if it ever does hit that $148 point and just say I'm away from the computer and it goes below that, it's going to trigger the system to automatically sell it at that time. So that way I don't have to worry about it anymore. And again, that's how you can guarantee your profits. As long as you're putting that stop loss order to make sure it sells at that specific price. And of course, you also don't want to, place the stop loss order a couple cents above you from what you bought it, because if I put it at 148, there's a chance it could sell at 147.95 or something, depending on what's going on with the market. So you want to be up, some money a little bit before you really place that stop loss order, to protect yourself. Because the worst thing you want to happen is you put that on and it sells below what you're expected. So going off of that, so the stop loss orders, so pretty much like we'll just say like if I bought it at 143 and it goes to 149, I'm gonna put a stop loss order at like 148 or something like that to protect myself. And as throughout the day goes, kind of adjust it based on what's going on with RSI, CCI, Bollinger Bands, Ichimoku Cloud. These are the indicators that I use when I day trade. I don't really use anything else other than obviously CNBC that I said. But that's how to protect yourself and make sure you're getting those wins. You sell it at 148, and then look, now you can buy it here at 146. Now you're buying at a discount of $2 a share. So you're making money on that to help reach your goal, of where you're trying to go. Now, a couple things that I do want to mention about trading in general. Typically, like 9:45 a.m. to 10 a.m. is typically when a lot of trading goes on. Obviously, first thing in the morning, like the first 5 minutes, there's going to be, a ton of trading because everyone's excited to get in the market. And then it's going to calm down a little bit. Around 9:45, it's going to, kind of set itself up for what's expected for the rest of the day. And then around 10 o'clock, between that time, people are, getting back into it again. And then it kind of chills a little bit. Obviously, there's some stuff like here, right after 10 o'clock, there's a big sell off. Another time is around 1 o'clock. Around that time when everyone's coming back from lunch, you want to understand that the stock market is psychology. It's always psychology, and people forget that. They always try to, make it more complicated than it is. But the price goes up based on, what people are thinking are going to happen. So, it's psychology. So when people are, coming off from lunch, at 1 o'clock, the Eastern time, where Wall Street is. Let's see where that is. Yeah, like right here, right in this area. You know what I mean? Like Oh, I can't even highlight it. Okay. But yeah, right here you can obviously see like this 1 o'clock time and going onward. There's a lot of action going on. And then again, usually at the very end of the day, like 3:45, 3:55, the last 10 minutes or so, whatever it is, then you'll start to see it gets a little more active as it's kind of closing the day. Everyone wants to get their last trades in and last sells. So that's typically when that goes on. Now, the other thing that I do want to talk about with day trading is the Ichimoku cloud. This is something that I kind of said before. It's kind of medium long term investors and traders. What you're kind of doing weekly traders. But this can also work for day trading. It's not going to be as accurate because it's way more sensitive. But as you can see here, a little bit like there's a little false indicator, but there's the sell point and it goes down to here. Here's a buy point, goes up, sell, and it goes all the way down here, buy again up here, little false indicators, but then it eventually crosses again there, goes up a lot, couple bucks, and then fades out there. And obviously if you play that right, you could have made like $5 a share, which is dope. So, and then again, here's the sell off at the end of the day. So depending on with today being Saturday, on Monday, it's going to be interesting to see what happens. Markets are probably going to go down just a little bit, but it's probably going to open down and then probably make its way up based on what the RSI and CCI are doing right now. But that's pretty much that. Let's take a look at like TECL, another semiconductor one. Again, you can kind of see that that 1 o'clock time really kicking in. The Ichimoku clouds going, that whole pattern. And let's try TQQ, something more S&P 500 standard. Again, same thing. I mean, the markets in general kind of move together, especially with indexes and ETFs, which is what you should be trading. But yeah, that's pretty much like how I day trade, I guess. A lot of day traders, they try to make pennies. You know what I mean? Like they'll buy it here and then sell it for like 5 cents higher or something like that. And that's just like not worth your time. It's really not. You're better off just like buying here, right when this crosses or whatever, and then crosses again, sell it right there. And, you made a couple, whatever it is. Or here, it's just better to hold on to it. A lot of people, most day traders, they end up like screwing themselves over because they try to make these penny pinching moves and then they end up losing money because they sell at the wrong time or whatever like that, or they miss something like this huge opportunity that they could have had when they were just trading for pennies, 2 pennies, whatever it is back here. And in reality, if you just wait a little bit, chances are, market's going to kind of fix itself. And again, like many investors say, like Warren Buffett, I'm a huge fan of his. He even says, it's the people that day trade that end up not making money. You got to hold it on for the long run. You got to ride with it. Obviously, he does way more long-term investing. He's usually investing into stuff for like 10 years plus, where my strategy is more, you can do a little bit of day trading, buy and sell a couple times a day, weekly, monthly, whatever it happens to be until you get positive. The other thing I do want to mention on a more day trading scale is you are not legally allowed to trade the market unless you like day trade the market unless you have $25,000 or more in your account. Now, this is based on U.S. standards. For those of you outside of the country, I do not know what that is. But yeah, at least for in the U.S., if you day trade multiple times a day or day trade, I think even once a day, you get like marked or something. No matter if it's Robinhood or Fidelity, TD Ameritrade, any of that stuff. And if you get like 3, then it's like you get suspended, and I think like you eventually get banned, or I don't know, something weird like that. Just know that if you don't have at least $25,000 in your account, don't be day trading because you're just going to screw yourself over and it's not worth it. Like I said, you do get 3 strikes. So worst case scenario, like if you need to use 1 because something really bad in the market's happening, then go for it. You're probably going to want to do that just to protect yourself. But again, don't take a loss. So that's it for this video. This is the first aftermath, we'll call it. And if you do have any other suggestions, reach out to me and I will do my best. See ya.